Hi everybody, it's Alan Stewart with your Real Estate 101 tips and tricks. And this week we get to look at FINTRAC and your responsibilities as a licensee working within the confines of the Canadian Real Estate Association and your responsibility to collect information on behalf of the federal government. In essence, you get to be a secret spy. Now, CREA has put out 5 training modules that I'm going to try and sum up in this one brief video so that we don't need to spend a lot of time reading and reviewing them. I also think this is a more effective way of communicating, and it allows you to refer back to it from time to time if you need more insights into what's happening when it comes to FINTRAC and your responsibilities. First off, why would you comply? Well, because the fines are really significant, up to $500,000 for non-compliance with the FINTRAC regime. So it's really important that you remember your responsibilities and protect not only yourself but also the brokerage. Module 1 of CREA's training relates to what is FINTRAC and what are they trying to accomplish? Well, effectively, FINTRAC is the Financial Transactions Analysis Center, and what they're trying to do is get data on 2 groups of individuals, both of which we don't like very much. Number 1, the criminal element that are trying to use our economy to launder money. Number 2, terrorists that are trying to use our economy to finance terrorism. And I think we can all agree that those are both things that we'd like to play a part in interceding in. Let's talk a little bit about money laundering. Money laundering is where a criminal tries to hide their identity to make a significant purchase and extract the cash clean so that it's not traceable back to the original individual. So how would they do that? Well, there's a number of ways. The first way is called placement, and that's where they would use cash to go and make a significant deposit on a transaction. That's why we don't accept cash as deposits on transactions. So there's not much for us to talk about when it comes to placement. The second way they could do it is by what's called layering, and that's where they take money from a whole bunch of different places in order to make one significant transaction. Now, one thing that you do want to be paying attention to is international financing, particularly if we have international wire transfers. Those wire transfers can be originated by an individual who is fictitious. They go into a bank in a country that doesn't have as stringent requirements, and they will wire transfer the money over to a legitimate Canadian institution or individual, corporation or individual. So that's why we need to identify our clients, the people who are receiving the funds. Those are the only people that give us a link back to the originator of the money. It can also be done by way of corporate financing, and this is called integration, where the money actually comes into the system, corporate financing and or the actual closing of transactions. So this would take a dirty accountant or a lawyer, some kind of a consultant who would take the money, the dirty money, pool it into a trust fund with a bunch of other money, go and make purchases, not necessarily a trust fund, but any pool of money, go and make purchases and then pay back the dividends or shares, and it's hard to trace that money back to the original investor. Those are effectively the ways that people launder money within our economy. And when it comes to real estate, your responsibilities as a professional are effectively to be paying attention to how the financing is working. If it seems funny or suspicious, if there's huge amounts of cash involved or lots of little financing things coming together to make it happen, and you have other reasons to believe it may be a suspicious transaction, that's when you'd want to fill out a suspicious transaction record and submit it to FINTRAC. When you're feeling funny about a transaction, is come and see your managing broker, and we'll talk it through and see if maybe we think it warrants sending in a suspicious transaction record to the FINTRAC folks. Now, how about terrorist financing? Well, terrorist financing is pretty simple. If you're dealing with a terrorist, you got to tell the feds. And there's specific records that we'll talk about a little later. But effectively, there's a list of terrorist organizations and individuals that are posted online. I'll put a link to that underneath this video on our YouTube channel so you have a clear way to go and check that list to find out whether or not you're dealing with a terrorist. If you're dealing with a terrorist, you should tell the feds. Just a heads up. That's the law. Who are the players when it comes to FINTRAC? Who are the players that come to identifying terrorists and criminals? And those effectively are the people you are already familiar with when it comes to our side of the equation. That would be the Canadian government, CSIS, the RCMP, the folks at FINTRAC, the Canadian Border Services. Those kinds of organizations are all working on the same team. And who are the bad guys? It's effectively the criminal element that you would know. It's organized gangs, it's drug dealers, it's motorcycle gangs, it's Eastern European gangs, Asian gangs, native-based gangs, white-collar professionals that are involved in criminal activities. Anyone that you think is a criminal, those are the bad guys. Module 3 of the Canadian Real Estate Association's training manual relates to reporting and our responsibilities. Now, effectively, the brokerage is responsible for reporting everything. It's your responsibility as a realtor to go out and collect it. It's our responsibility to report it, except when it comes to dealing with terrorists. In that case, both the broker and the realtor are responsible for reporting the information to FINTRAC. What's a good way to remember your responsibilities? Effectively, it's pretty simple according to the module. It's KYC. Know your client. It means you need to really know that the person you're dealing with is in fact the person you're dealing with. You can do that by way of identifying them. So you need to do that by identifying the individual you're working with, verifying that they are who they say they are. So by looking at photographic ID and making sure that those line up with who they say they are, and then monitoring your business relationship. There's been some discussion as to, well, is this a business relationship or is this not a business relationship? I can tell you that every transaction entered into with one of our realtors is considered to be a business relationship. It's the only smart way of doing business because we have hundreds of agents. If you do a transaction with one individual, that's one transaction. If another realtor does a transaction with the same individual without you knowing about it, we as a company have effectively entered into a business relationship. So we treat every individual as being in a business relationship with the company. So bear that in mind when it comes to your reporting responsibility. Now, there has been some discussion about the fact that I know who this person is. I've known them for 30 years. That's fine. The first time you deal with them, you need to get the identification documents. After that, you no longer need to go and secure identification documents when you're dealing with them because you know who they are. You've already identified them. So what are the different types of reports that you might have to file to FINTRAC? Well, effectively, there's the large cash transaction record sheet. This doesn't have to be filed because we don't deal with cash, so we don't have to worry about that. The second one is if you're dealing with a terrorist property and you have proof of it, you need to submit a terrorist property report to FINTRAC, and then they'll step in, obviously. It's an offense to continue to deal with the terrorist property once you know that it's a terrorist property. However, we need to get some advice on that before you take drastic action. One thing you need to bear in mind that it's also an offense to bring the information that you suspect it to be a terrorist property or you suspect it to be a money laundering situation to the attention of the person that you're working with. To give them that information would be an offense against the act and something you would be liable for. So keep it quiet. If you have suspicions, come and talk to your broker and we can take it further. Finally, if you have suspicions, if you just have concerns, you would file what's called a suspicious transaction report. If the financing just doesn't smell right, if you feel weird about it, we'll talk a bit more about that, what things might come together to make you suspicious about a transaction, and or you're suspicious that it's a terrorist property, then what you do is you fill out a suspicious transaction record and continue dealing with the property in the way that you see fit. The Canadian Real Estate Association recommends that you be safe when dealing with identifying clients. That means that you screen, ask, find, and evaluate. And I'll go through those in some detail now. So when you screen a client, you effectively ask for the information. If they don't share it with you, that in and of itself does not mean you need to file a suspicious transaction report. It just means you need to write down in your notes, client failed to provide or refused to provide identification documentation to me. Then FINTRAC recommends you ask, that's the A in safe, you ask why they're making this purchase, who's the ultimate beneficiary of the purchase. Just ask general questions that might lead you to an understanding of what's happening with the transaction. The F in safe relates to find. That means coming to see your broker if you have suspicions and going through previous transactions that may have been conducted with that individual or that corporation in order to find out whether or not we might have reasons to be concerned. And then finally, evaluate is the E in safe. That means, does this smell funny? Do all the things that we've considered, we've screened them, we've asked some questions, we've tried to find out more information about the individual, does that bring us to some kind of conclusion that maybe this is a suspicious transaction? So what kind of things might lead you to evaluate the transaction as suspicious? Well, is this an individual that's coming from offshore that wants to buy a whole bunch of properties at one time with no clear intent as to why they're doing so? Is this an individual who is refusing building inspections even though there's no competition in the market and maybe they're prepared to pay more than market value in order to make a deal come together? Is this an individual who's using a nominee to secure their financing that you don't think has any relationship to the individual? Is this a client who pays cash to contractors to do significant renovations and boost the value of the property and doesn't look for receipts and wants to use kind of under-the-table payments to make the renovations happen so they can go and turn a large profit on this? It would only make sense for an individual to want to be able to write off those expenses. I'm going to put a list of the types of evaluation criteria that you might want to consider down below in the comment section of this video so you can go through and refer to them, reasons why you might suspect, especially if they come together in a whole bunch of combinations to make you really think that, hey, this is a suspicious transaction. Now, how about keeping records of all these transactions? Well, again, the obligation falls on the brokerage, not on the employee or the realtor. So if you leave the company, the brokerage is responsible for being able to provide those FINTRAC forms within 30 days of the request. So that's why we're always on you looking for the FINTRAC information records, because if you leave the company, we're the ones on the hook. And the fines are significant, upwards of $500,000 for non-compliance. So it's really important that we have those forms in-house at all times. So here are the lengths of times you need to keep these things. It's the client information and the corporate information, those forms, and the suspicious transaction forms. Effectively 5 years from the date of the completion of the transaction, we need to keep those client identification records, and we do that off-site in secure housing. We also need to keep those corporate records, the same things, for 5 years after the date of the closing of a transaction. And then suspicious transaction reports we need to keep for 5 years after the date that it was reported. So if a deal doesn't come together, we destroy the forms and the records of information about clients. We collect all the information at the beginning of the transaction, so when you list a property for sale or when you start working with your buyer, you should be identifying them. If a deal doesn't come together, we destroy their personal information. We don't want to keep hold of that. We only hold it once the deals have been consummated, except if it's a suspicious transaction, in which case we're going to hold on to those records for 5 years after sending them into FINTRAC. Now, when it comes to Module 5, I'm actually going to refer you to the PDF document entitled Module 5 Suspicious Transaction Indicators, and once again I'll include a link in the video, but you'll find in this brochure a lot of different tips about what might twig you off to a suspicious transaction. And this is the document we would refer to if you and I sit down together to look at something that just doesn't smell right to you in order to make a decision as to whether or not we're going to file a suspicious transaction report. If you have any questions, always feel free to call.